Alberta business bankruptcies have exploded to the highest levels since the global financial crisis. And we're also going to get into what is happening with condos because unbelievable risk there for the banking system. So first of all, let's start off with what's going on in Alberta though. So you can basically see what's happened. And obviously this is lagging data, but you've got February that's now been reported. 32 businesses went bankrupt, but that is the highest level going all the way back to 2010, 2009, around that levels. I mean, it's higher than during the pandemic. It's higher than during the 2014, 2015 oil bust. I mean, that just goes to show. And if you take this to personal bankruptcies, this is really interesting. So it's actually really low. But here's the thing. Business bankruptcies are going to feed into personal bankruptcies. And when you look at the unemployment rate in Alberta, you know, it's on the higher end, but it's not as high as Ontario. And we're going to get onto what's happening in Ontario with condos, but it is higher than the Canada average right now. But obviously, if lots of businesses are going bankrupt in Alberta, then that's going to feed into unemployment. The fact that that is at a high is not a good thing. And then just quickly, let's chat about the Calgary real estate market, because this has been such a focal point for so many people. Investors have rushed to speculate here, and now the market quickly looks like it's falling apart. So I'll tell you what I mean here. So if we look at the total, actually the Calgary Real Estate Board actually has really good stats and they update them every day. So total sales here down 22% year over year. New listings up 15.67% year over year. But this is it. Active listings up 114.65%, and the median price is only up 4% now. But you know, that is really just being held up by detached, actually, because when you actually get into other parts of the housing market, like townhouses, for instance, they've got even worse growth, 1.57%, and listings are up 190%. But if you go over to apartments here, you can see that listings are up 95%, and prices are actually now drifting negative after people rushed from Ontario to buy speculative assets in Alberta, particularly in Calgary, in condo towers. So what's happened as a result of that is lots of new projects have kicked off, and now everybody's rushing for the exit. So there's going to be a load of new inventory that's coming online in Calgary, and there's going to be no one there to buy it, because if you look at what's going on here, about 30% of Canadians now say condos have lost investment appeal. This was April 22nd, 2025. So according to a new survey by rates.ca, about 30% of Canadians say condos, once seen as a good investment, no longer have that same appeal. The survey of 1,500 Canadians also found that just 11% say they would buy a condo as an investment. I mean, that is unbelievably low, while 57% said they would not buy a condominium for any reason. And then I want to highlight this because it gets really interesting. You know, we went over this table salt saying about China's condo inventory versus Toronto, but this poses a certain risk to the banking system, which is more what we're going to get into. So if we go over to Warren, which is investing.com's AI model, there's an affiliate link in the description, by the way, if you want access to this really good platform. But anyway, I asked it, do we know how much of the Canadian bank loans are concentrated in condo projects? And basically there's no specific figures on it, but if you look at the gross loans here, you can see they go right into the trillions of dollars. You've got Royal Bank of Canada with the most loans, and then you've got the National Bank with $170 billion worth of loans. And then I also asked it, how much cash on hand do Canadian banks have versus their loans? And basically it gave this, which is really good. So it basically shows here that the Royal Bank of Canada has a strong liquidity position because it has $69 billion in cash and cash equivalents versus $1 trillion in loans. It's unbelievable. $1 trillion. So the cash to loan ratio is 6.85%. TD Bank, notably lower cash reserves at $6.55 billion with nearly $1 trillion in loans. I mean, look how different these are. That is really what I'm seeing here. The difference is huge. So the gross loans at TD nearly $1 trillion. So their cash to loan ratio is just 0.67%, not even 1%. And then you look at Bank of Montreal, $76 billion in cash and cash equivalents equivalents, $693 billion in loans, and 11% cash to loan ratio, which is actually stronger than the Royal Bank of Canada even. And then you've got Scotiabank, $4.1 billion in cash and cash equivalents, $773 billion in loans, and 0.53%. That's the worst cash buffer out of the big five here. And then you've got CIBC, which is somewhere in the middle at around 2.28%. And then you've got National Bank of Canada at 8.19%. So what really stands out there is obviously Scotiabank and obviously TD Bank as well. Now, with the money laundering fines that TD's had to deal with, that probably explains why they've got noticeably less cash on hand than the other banks. But Scotiabank, yeah, I don't really know what's going on there. And obviously Scotiabank is in a lot of markets. I mean, they're all over Latin America. They're in the Dominican Republic. They're in the Bahamas. They're everywhere. Scotiabank is a big name. So you would think that they have a very diversified portfolio, but really, who knows? And when you think about what happened with China and all the developers that went bust and they went under, you have to ask the question, well, what is going to happen here? Because you've got Toronto with more than double the amount of condo inventory of China. I mean, it's just hilarious to even say it, but that is the reality. And then the reason why I've been pointing out Calgary is because in particular, this has been a focus point for speculation, and it is another place where you're going to see the market flooded with new inventory and new projects that maybe don't even get completed at the rate they're going, because banks, they are definitely tightening up lending. That much is obvious to everybody. You can see it in the Bank of Canada's loan data. So the liquidity flow is turning off, and the fact is a lot of these developers aren't going to be able to prove that they're actually selling all these units, and then are they going to be able to fudge the numbers through blanket appraisals to actually get mortgages on those purchases? I mean, there's a lot of question marks obviously going on right now. And then you also have to look at the actual economy in Alberta, and you can't say it's in a good place with unemployment above the average in Canada. And yeah, Toronto is a lot worse. Toronto collapsed a long time ago, and business bankruptcies that are taking off to the moon right now. I mean, they are just skyrocketing. If you look at this chart, that is exactly what's going on here. You've got bankruptcies that are exploding in Alberta, which is not a good sign. So we're going to have to continue to monitor here what happens, because it's going to be very interesting to see. But what is clear is Canadians do not want to buy condos. They're not interested in condos anymore. So anyway, if you've enjoyed this video, I'd highly recommend you check out this video here. And then if you want to check out investing.com, there's an affiliate link in the description. I will see you in the next one. Take care, guys. Bye-bye.